Hey traders, Raghee here, and in this update's more about the current state of where the market sits in relation to some key levels on the daily time frame and how that affects our day trading. And then I'll revisit my pick for today, which was the RTY that we talked about in yesterday's update. All right, so the Dow has not been, even though we're looking at, clearly a resurgence to the upside, the Dow's not been one of those names that I've been really anxious to short. S&P and NASDAQ are a little bit easier, and the Russell is not valid for shorts. And the reason is something you'll notice on both the Dow and the Russell, although the Dow's been flirting with this level. Today's the day that we decide whether or not the 1 month anchored, so they call it the October volume weighted average price, is being broken, which would then get me leaning towards shorts intraday more so than long positions. The S&P and the NAS, it's far easier to look at the short side and the long side than exclusively the long side, which is what I've been doing for many, many months across the day trading across the indices. So say the S&P right here, really trying to make a decision about whether or not it's going to establish price action below and let me expand this chart out, below that 1 month anchored volume weighted average price. The NASDAQ, relatively speaking, is the weakest. All right, it's been the one that's establishing itself a little bit more. As you can see here, slight closes below. Now, you might say, Rog, it doesn't look like any four of them. It's definitely not the Russell, marginally the Dow, marginally the S&P, a little bit more convincingly the NAS. It doesn't look like any of the four have clearly established the movement, the resistance at the VWAP. And except for the NAS, I completely agree. So what you'll notice is the VWAP has a certain gravitational pull. It's not like it's a hard and fast support level or resistance level. It's not as if upon breaking that level, if we were using the example of a trend line or using the example of a horizontal support or resistance level, breaking it isn't enough because there's enough gravitational pull where the market tends to be drawn back to it. It's magnetic, right? So right now, and this is a very rare shift. So this shift is something that we haven't done in many months, and I won't be here for long. And that is, I'm open to two-way trading. I'm open to, now let me show you some of the stuff we looked at today. I'm open to, and this is a huge shift, those of you that are members and not, you will not hear this from me very often. I'm okay with looking at the hourly price movement range and V-score highs to short, and I'm okay with looking at the V-score and the hourly price movement ranges to buy. We're looking for extremes. We're trading this in more of an overbought, oversold type approach. I don't expect this to last long, certainly not longer than the election window. And if we can establish price action clearly back above the VWAP that's anchored to October 1, terrific. We can go back to more preference for the long positions. If we establish more clearly below that VWAP, I'll have a preference for the short. But right now, we're open to essentially both sides of this market. I don't like two-way trading as a habit. There's nothing wrong with it. It's just that my career, 30 plus years, has not been built on two-way trading. It's having conviction one way or the other in what the path of least resistance may be. So that also brings up a simple point. If you are struggling a little bit in this environment, it's because the market is playing exhaustion at the top and bottom of the range, and it's a little bit more two-way trading. You've got to be flexible and nimble enough to shift gears. The other thing is we've had a couple examples of it. Today would not be a good example of it, but Monday was, where once we start heading lower, we just keep heading lower against the path of least resistance, which has by and large been up. So if we have a sell-off day within a bullish directional bias market, those are always going to be difficult kinds of trading days for the way that I like to look at the market. So know what it is you're looking for. Wait for that pitch. Today was actually a pretty good day. In the premium video, I'm going to dive into some of the ETFs that we looked at and talked about, and also the way in which, because of the more elastic, unpredictable nature, due to a press conference at 10:45 around the stimulus package and things like that, why we opted for options on the lower end of the range in order to control risk, and how we traded this morning. All right, so with that, I'll see you all in the next update.